please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
India revenues are down by 7.5% on an annual basis, which was expected. So, as I said earlier, the revenue for India, okay, I don't have the exact revenue breakup yet, but India revenues are down on an annual basis by 7.5%. Africa revenues have gone up on a 10.7% annual basis. So, consolidated revenues at this point are at 19,634 crore rupees. I repeat, 19,634 rupees. We were expecting it to come in at 19,730 crore rupees. So that's down by about 5.4%. So that is below what Rima's poll had thrown up. But in terms of the margin, it is better than expected. In terms of the profits, it's better than expected as well. I'm just going to go into the exact India and Africa performance. But Rima, quickly come in on these critical points. As far as the top line is concerned, it seems to be a little bit of a miss over there.
A little bit of a miss. Do we have the India wireless performance?
No, I'm just getting that exact data, Rima. I'm just getting that data. We have some of the other parameters. For instance, Africa EBITDA margin is at 35.9%. The consolidated EBITDA is 7,034 crore rupees. And a couple of other points also, as far as the highlights are concerned, they've completed the acquisition of Tigo Rwanda in this particular quarter. So we need the exact India breakup in terms of the revenues and the Africa. But as I said, the overall revenues have actually gone down for India, which was expected. Domestic has been something that has been challenging for Bharti Airtel. We've actually seen Africa perform very well in the last couple of quarters. We'll get a few analyst reactions as well. But at this point in time, the points that we have is that they have come in with a profit of 83 crore rupees in a quarter that we were expecting a loss. And the overall top line is slightly lesser than what we were expecting, but you can perhaps take heart from the margins being better than expected. Prakash Diwan is joining in on the phone line as well. Prakash, come in on the numbers. I'm just getting the exact breakup as well, but come in on the headline numbers.
This would be a pleasant surprise that the loss has finally not been shown after all these quarters of profit. There was this anticipation, this whole inhibition that there could be a little bit of a negative number. So I think it's been pushed ahead for some other day, not this quarter. And that will probably be taken very positively. And what's likely to happen going forward, I don't see Bharti struggling as much as it struggled in this given quarter, the last quarter, for the simple reason that this is where competitive intensity was at its fiercest high. So you had Jio not wanting to improve or increase the tariffs, and you had still players other places.
How do you think that they would have worked? Is there a one-off that has come in this particular quarter, because very naturally speaking, we were expecting the full impact of Jio, the full impact of even the international termination rates coming in this particular quarter. So even margins, for instance, seem to be slightly better than expectation.
No, so the EBITDA, these are EBITDA margins which have improved. So which means there should not be any one-off gains that have taken this 103 crores of loss expected to straight away to 83 crores. So the delta is about almost close to 200 crores. That's the bottom line improvement from expectations. But the point is that the EBITDA itself is higher enough. So what Bharti seems to have done is clocked significantly better revenues. And that once we get, the finer points of the ARPU levels and, revenue per user. So that will, usage could probably be much better in some of its high-paying client segments. We'll have to see that. But my sense is that it is an operational beat, which is there. This would not rely on one-offs to kind of, show
I get that. Naveen Kulkarni is also joining in on the phone line. Naveen, what do you make of the bottom line and the margins coming in better than expected? Revenues are slightly below what we were expecting, but I think the street could take heart from these two parameters.
So in terms of revenue, the important line item here is the mobile wireless revenue. So that has come at around 10,350 odd crores. So that number is pretty much bang in line with what we were estimating, around 4% decline on a sequential basis. Okay. So that is not a bad number to be looking at. We were expecting an EBITDA of around 650 crores, and If I were to take out the other income from what is being reported for around 75 crores, so that EBITDA number is close to around 6930 odd crores. So even the EBITDA number is pretty much in line. Consensus, I would believe that was on the lower end, in the range of around 6800 odd, 6800 to 6900. That was the expectation. So it is slightly better than that. The earnings, if I were to look at it, the mobile business, India mobile business is reporting loss. So that is there. The other businesses have actually managed to keep the company in the green. Otherwise, Mobile Services India business is reporting an EBIT loss of around 482 crores.
Are you disappointed with the India Wireless performance?
But that was expected. That was pretty much expected. And again...
but it is in line with what you were expecting.
Yeah, so pretty much that was expected.
So they've largely seen that outperformance on a couple of parameters based on which specific businesses? Is that led by Africa?
So Africa is, of course, continuing to do well. But overall, as I was saying, so we were expecting a 70 crore kind of a profit. I believe to some extent the India mobile services business is probably reporting slightly better numbers than the consensus. I believe consensus would be looking at probably 6-7% decline. That would have actually resulted in a 200 or 300 crore kind of a loss in the overall scheme of things. But that is probably a 4% decline, so that is what is actually has helped actually to report slightly better than expected earnings as well as EBITDA, I would say.
Okay, Naveen, stay with us. Prakash, come in on the India Wireless performance and the India business performance. Do you agree that it is slightly better than what you were also expecting? Of course, there are challenges there, but do they seem to be afloat in many areas?
No, absolutely. I mean, I think the expectations had kind of built up so much in terms of the negativity that there would be a significant drop there. While the expectation was that it would be a loss, the question was the quantum, and I think everybody kind of in the estimates went a bit overboard. So that's why optically things are looking much better, because the polls, the expectations were all significantly lower. So, but otherwise, I think that should be taken with a very clear indication that this is the past. Going forward, it will not have such a negative impact. So you need to look more ahead in terms of, from these numbers that is coming out, which is positive.
Okay. I'm getting the India EBITDA at 28.4% for the wireless business. Naveen, would that be disappointing at 28.4%?
So sub 30% EBITDA is what was consensus expectation. So I would not be disappointed with the sub 30% EBITDA number, because that is what we were all building in for the quarter.
Okay. So even the average revenue per user has declined by 5.9% on a quarter-on-quarter basis. That has come in at 116 rupees, which would compare with 123 rupees. So that seems in line with expectations. With respect to the data numbers, the data volumes have gone up by 39.2% on a quarter-on-quarter basis, while the data usage per customer is higher by 23.1%. With respect to the voice minutes of usage, that's seen an increase of 20% on a quarter-on-quarter basis. Prakash, are these operation numbers pretty much what you were anticipating for the India wireless business? ARPU at least at 116 seems in line.
Oh, absolutely. It could have been much worse. And what's interesting is, and that probably explains why, the India EBIT is also not way off the mark, from that sub 30 level that Naveen also alluded to. The reason is the data volumes were likely to grow, but, data usage also is fairly in line or probably better than, what was expected. So that's probably showed them out in terms of this tough times. So while revenue might not have been a great, beat, it's actually, I think, the data thing which they have also focused on in terms of, their ad campaigns, their communication. So that probably has worked and nailed them out in this quarter.
Okay, fair enough. Prakash, Naveen and Rima, we'll leave it at that. Thank you so much for joining in with that. The other story on TDSAT is also very critical, and we will be taking the story forward. But for now, completely out of time on this edition of Reporter's Diary. From Ritu and me, thank you so much for watching.